opinion, what is the driver for lower valuations on REITs, BDCs, and other dividend stocks we are seeing over the last week?
Well, I think we have to separate them, right? You can't just lump everything together. Because REITs, I think what we really saw with REITs in general is kind of a buy the rumor, sell the news type movement. That they all rallied nice going into the Fed meeting. Since the Fed meeting, they've kind of trended down. And I think that's just probably more technical factors than anything else in the short term. With BDCs, and you really start getting into like CLOs, I think there is some nervousness over credit. I think there's a segment of investors who are out there who believe that we are going to see a default spike, who believe that credit is going to start falling apart, and they're selling into that fear. And you can kind of see it with the CLOs. We have a couple CLO funds that we invest in. They've been trading at premiums forever, and now they're trading at a discount to NAV, which is something that just never happens. And then those kind of fears will start getting reinforced when the reality is they're investing in floating rate investments. Interest rates are coming down. That means that their cash flow is going down. And so that kind of becomes a self-feeding narrative that I think right now is in a lot of investors' heads. In the long term, you look at BDC prices, they were higher than ever in 2021 when interest rates were 0%. You get to that point where interest rates start getting so low that then suddenly people become hungry for yield. They're like, just give me 10% from anybody. I don't care who. And then you start seeing the higher yielding stocks start getting bid back up. And so that's kind of the longer term trend I expect to play out. But in the short term right now, with those BDCs and CLOs, we're seeing people be nervous about credit. We're seeing people thinking, well, interest rates are coming down and they're floating rates. And I think that's really a source of a lot of the selling pressure we see right now. With REITs, I think it's more just a pure technical move right now. And I think when you're looking at the 3-year charts a couple of years from now, you're not even going to notice the blip. It's just the stock market doing what the stock market does. And right now, the other day, we saw a good sell-off on REITs, especially mortgage REITs and equity REITs. And the only news that I could really tie it to was, okay, the 10-year yield popped up a little bit because traders were bored and there was no news coming out. And then it started correcting itself the next day. So I think that kind of turmoil is kind of normal whenever you're going through a period of change. Stock prices are volatile, and that's why I don't worry about them until I started working for REITA and people were asking me, why did the price do this? Why did the price do that? Honestly, I didn't even really notice what the price was doing because, well, for the most part, price changes don't change why I'm investing. I'm investing for the dividend. Earnings season comes along, I'm going through every page of the filings to make sure my dividend is safe. If it is, the rest of the market can do whatever the heck they want.